Welcome back to the Investing Talk podcast, everyone. Today we're looking at Aditxt, ticker symbol ADTX. It's a company that's been making some serious moves, some serious price swings lately in the market.
Yeah, it's been a wild ride for sure. It has a lot of investors wondering, is it a hidden gem or is it a gamble? That's what we're going to try to figure out today.
All right, so let's start with the numbers. One of the things that really jumps out is ADTX, shot up over 57% on February 19th, 2025, closing at 11 cents a share. I mean, that's a gain that would make anybody pay attention.
Huge jump, no doubt about it. But before you get here excited, got to look at the bigger picture. This stock has been incredibly volatile. Over the past year, it's traded between 6.5 cents and $218. Whoa, that kind of volatility is a major red flag. Really suggests that the company might be struggling.
So it's not just a case of high risk, high reward then. Sounds like there's a lot more to think about here.
Exactly. High risk is definitely there, but the reward, well, that's a lot less clear. Anyone thinking about investing in ADTX needs to be ready for a bumpy ride.
Which leads us perfectly into our next point, the merger. February 18th, 2025, Aditxt announced they're merging with another company, and this news definitely got people talking.
Mergers can be tricky, could be a sign of growth and opportunity, but they can also bring a lot of uncertainty. With Aditxt, it's too early to tell what the impact will be, but investors need to keep a close eye on this.
And speaking of keeping a close eye on things, Aditxt CEO Amro Albana is going to be hosting a fireside chat on February 21st, chance for investors to get some insights.
This fireside chat is a must-watch. Mr. Albana is expected to talk about Diimmune, that's their venture into treating autoimmune conditions, and also Pear's early cancer detection program. His comments could give us some clues about where the company is headed and how the merger might play out.
So we've got a volatile stock, a mysterious merger, a CEO about to step into the spotlight. But wait, there's more. We also have an earnings report coming out between February 26th and 28th. And as if that wasn't enough, there are whispers of a potential reverse stock split, too. Now, I know that could be a confusing concept, so could you break that down for our listeners?
Sure, a reverse stock split. It's basically a way for a company to bump up its stock price artificially. They do this by reducing the number of outstanding shares, which automatically makes the price of each share go up. Sometimes companies do this when they're struggling to meet the minimum price requirements to be listed on a stock exchange.
So is that a good sign or a bad sign?
It could be either. Sometimes it's a necessary step for a company to survive, but it could also be a sign of financial troubles. In Aditxt's case, it's another piece of the puzzle to watch closely. Yeah, it definitely adds another layer of complexity. To an already confusing situation, investors are going to want to pay attention to the timing of this potential reverse stock split and what the company says about it.
Okay, so we've got a lot of moving pieces here. From a technical standpoint, what are the indicators telling us about ADTX?
Well, one thing that jumps out is that ADTX is currently trading below both its 50-day and 200-day moving averages. Basically, this means the stock price is trending downwards.
And for those who might not be familiar with moving averages, could you explain what those are?
Sure, a moving average is kind of like a trend line that smooths out the day-to-day fluctuations in a stock's price, helps us see the bigger picture, and identify if the stock is generally moving up or down over a specific period. In ADTX's case, being below both the 50-day and 200-day moving averages is generally considered a bearish signal.
But didn't we also see that huge spike in trading volume on February 19th? Wouldn't that suggest there's still a lot of investor interest in ADTX?
You're absolutely right. That surge in volume is interesting. It could mean some investors are betting on a turnaround, or it could just be FOMO, fear of missing out. Hard to say, for sure.
So how should investors interpret all of this? It feels like we're getting mixed signals.
That's the thing with a stock like ADTX. There's a lot of potential, but there's also a lot of risk. It's important to look at the company's fundamentals, not just the price movements. One thing that concerns me is Aditxt's relatively small market capitalization.
Could you explain what market capitalization is and why it matters?
Market capitalization, or market cap, is basically the total value of all of a company's outstanding shares. You calculate it by multiplying the current share price by the total number of shares. Aditxt's market cap is only $8.68 million, which makes it a very small company.
And why is that a concern?
Well, smaller companies tend to be more volatile and more susceptible to manipulation. Their stock prices can swing wildly based on just a few trades.
So it's even more important for investors to be cautious with a company like Aditxt.
Absolutely. And then there's the question of earnings. While AG's trailing 12-month earnings per share, or EPS, is surprisingly high at 628.8, the lack of a price-to-earnings ratio, or PE ratio, is a red flag.
Okay, I think we need to break those down as well. What exactly is EPS?
EPS is a measure of how much profit a company is making. For each share of its stock, you calculate it by dividing a company's net income by the number of outstanding shares. A high EPS is usually a good sign. But you got to look at it in context.
And what about the PE ratio? You mentioned it's missing for Aditxt.
The PE ratio is a valuation metric that compares a company's stock price to its earnings per share. It basically tells you how much investors are willing to pay for each dollar of earnings. A high PE ratio can indicate that investors are optimistic about a company's future growth, while a low PE ratio can suggest that the company is undervalued or that investors are worried about its future. The fact that Aditxt doesn't have a PE ratio suggests there might be some skepticism about its future profitability.
So we're seeing a pattern here: volatility, uncertainty, and some potential red flags when it comes to Aditxt fundamentals.
Exactly, and that's why caution is so important. We need more information, more clarity, before we can make any real judgments about the company's long-term prospects.
And we're hoping that some of that clarity will come for the upcoming fireside chat, the earnings report, and any announcements about the merger or a potential reverse stock split.
Precisely. Those events could be pivotal in determining whether ADTX is a diamond in the rough or fool's gold. But in the meantime, it's important to dig a little deeper into the technical aspects. We talked about moving averages, but there's another indicator that's worth considering: the average true range, or ATR.
Now, I have to admit, ATR sounds a bit intimidating. Can you explain it in a way that's easy to understand?
Of course. Think of ATR like a speedometer for a stock's price swings. It measures how much the stock price typically moves up or down over a certain period. A high ATR indicates a lot of volatility, while a low ATR suggests a more stable stock price. In ADTS's case, the ATR is 20.6022, which, as you can probably guess, is quite high. This just reinforces what we've been saying about the stock's tendency for dramatic price movements.
So ATR is essentially another way of confirming that ADTX is a roller coaster ride for investors.
That's a great way to put it. And like any roller coaster, you need to be prepared for the ups and downs, and you definitely shouldn't ride it if you have a weak stomach.
All right, so we've covered a lot of ground here. We've talked about ADTX's recent price surge, the upcoming merger, the CEO's fireside chat, the possibility of a reverse stock split, and even some key technical indicators. What's the bottom line for investors who are trying to make sense of all of this?
The key takeaway is that ADTX is a highly speculative investment. It has the potential for significant gains, but it also carries substantial risks.
It sounds like the next few weeks will be crucial for ADTX, with all these major events on the horizon.
Absolutely. The merger, the fireside chat, the earnings report, these are all potential catalysts that could either push the stock higher or send it tumbling until we have more clarity. A cautious approach is definitely warranted.
So what are your final thoughts for our listeners who are considering investing in ADTX? What should they keep in mind?
My advice is this: don't jump in blindly. Do your research, look beyond the headlines, and dig into the company's financials. Understand their business model, their growth prospects, and their risks. And most importantly, make sure you're comfortable with the level of risk involved.
That's great advice. Investing should never be a gamble. It should be a well-informed decision. Yeah, it really comes down to doing your homework, making sure any investment you make aligns with your own financial goals and your risk tolerance.
Absolutely.
All right, so to sum it all up, it sounds like Aditxt is a company with potential, but also a lot of uncertainty. Investors need to really weigh the risks and the rewards before making any decisions.
That's a great way to put it. There's a lot to be excited about, but there are also some red flags that you just can't ignore. The next few weeks could be really telling for Aditxt. It'll be interesting to see what happens.
Well, this has been a really insightful conversation. Thank you so much for joining us today and sharing your expertise.
It's been my pleasure. Always happy to help investors understand the market a little better.
And to our listeners, thanks for tuning in to the Investing Talk podcast. We hope you found this look at ADTX helpful. As always, we encourage you to do your own research. Before making any investment decisions, don't forget to subscribe to our podcast, share it with your friends, and leave a comment letting us know which stock you'd like us to cover next. Until then, happy investing.